Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what companies are trying to hide in plain sight or what they're just trying to tell us in a very complicated way. Today we are diving into a filing from MetaVia Inc, or MTVA as they are known on the public markets. This is what's called a Form 8, which is basically a report for big events that happen outside of the usual financial reporting cycles. Think of it as a company's way of saying something important just happened and you need to know about it. Like yesterday. And boy, oh boy, is there something important happening here. This report is all about MetaVia Inc, potentially getting kicked off the big stock exchange they are listed on, the Nasdaq capital market. Now, getting delisted is a pretty big deal. It means investors might have a harder time buying or selling the company's stock, and it can seriously hurt the company's reputation and stock price. So, what is the problem? Well, the company's stock has been trading below $1 for quite a while now, specifically for 30 days straight. Nasdaq has a rule, like a minimum price to stay listed, and MetaVia Inc just wasn't hitting that mark. Companies need to have a stock price of at least $1 to stay on the Nasdaq capital market. It's like a basic requirement for entry. Normally, when a company falls below that dollar mark, they get a certain amount of time to fix it. In this case, MetaVia Inc had about 6 months starting from May of 2025, so until late November to get their stock price back up. Now, MetaVia Inc clearly felt they needed more time. They went to Nasdaq and asked for another 6 months, basically until May of 2026. To support their request, they pointed out they still had over $5 million in shareholder equity, which means the total value of what the owners have in the company is still positive. And crucially, they have a plan. They are talking about doing a reverse stock split. This is a move where a company can reduce the number of its outstanding shares, which in turn artificially increases the stock price. For example, if your stock is trading at 50 cents and you do a 1 for -10 reverse split, suddenly each share is worth $5. They also mentioned that their shareholders had already given them the okay back in June to do such a split, with the exact ratio, so how many shares get consolidated into one. Being up to their board, they plan to use this mechanism to get their stock price back above that dollar mark for at least 10 days in a row before the deadline. And the good news for MetaVia Inc, at least for now, is that Nasdaq has granted them that extra time. So they now have until May 2026 to get their stock price up to at least $1 and keep it there for a while. The company is saying they will keep a close eye on their stock price and are ready to pull the trigger on that reverse stock split, or any other option they have to meet Nasdaq's requirements. Now, this is where it gets serious. If MetaVia Inc fails to get its stock price above $1 and keep it there for the required 10 consecutive business days before May 26, 2026, Nasdaq will start the process to delist their stock. They do have a chance to appeal this decision to a special panel. But the filing makes it very clear that there is no guarantee they will succeed or even maintain compliance even if they manage to fix this particular issue. This tells us the company is in a precarious position. So what does this all mean? Well, it is a classic case of a company struggling with its stock price. A low stock price isn't always about the company failing, but it can be a sign of investor doubt or simply that the market is valuing the company at a low price per S-share. The reverse stock split is a way to technically meet the listing requirement, but it doesn't magically fix the underlying business problems that might have caused the low stock price in the first place. It's like putting a bandage on a deeper wound. MetaVia Inc needs to focus on improving its actual business performance and investor confidence. If they don't, even with the extension, the risk of delisting remains very real. This situation highlights the constant pressure companies are under to maintain their stock price and meet exchange requirements. A delisting could make it harder for them to raise capital in the future and could signal broader issues with their strategy or market position. Alright, that is our breakdown of MetaVia Inc. Its latest filing. What is your take on this situation and what they need to do to survive on the Nasdaq? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where we discuss these things further. Thanks for watching, see you next time.